If you're not ready to file your taxes by April 15th, you have options, and one of them is completely free and takes less than 5 minutes. It's called a tax extension, and in this video, I'm going to show you exactly how to file one, what it actually does, and the one mistake that causes people to get penalized even after they file it correctly. A tax extension does one thing. It gives you 6 extra months to file your return. That moves your deadline from April 15th to October 15th, 2026. But here's what trips people up every single year. The extension only covers the paperwork. It does not give you more time to pay. If you owe money to the IRS, that payment is still due on April 15th, period. Filing the extension without paying what you owe means you'll face penalties and interest starting April 16th, no matter what. So before you file anything, take a few minutes to estimate what you owe. Pull up your last pay stub, your 1099s if you're self-employed, or whatever income documents you have. You don't need an exact number. A reasonable estimate is all the IRS requires. This is important because the amount you estimate goes directly on Form 4868. And paying that amount by April 15th is what protects you from the late payment penalty. There are 3 ways to request your extension. The fastest is online through IRS Direct Pay at irs.gov/payments. When you make a tax payment there, you simply select extension as the reason, and the IRS automatically processes your extension for you. No form to fill out, no confirmation to wait for. The second option is IRS Free File, available at irs.gov/freefile, where anyone, regardless of income, can submit Form 4868 electronically. The third option is mailing a paper Form 4868 to the IRS. But if you go that route, make sure it's postmarked by April 15th. Now let's talk about the 2 penalties you want to avoid. The first is the late filing penalty. If you miss the October 15th deadline after getting an extension, the IRS charges 5% of what you owe for each month the return is late. And if your return is more than 60 days late, there's a minimum penalty of $525. The second is the late payment penalty, which is much smaller, just half of 1% per month on the unpaid balance. But it adds up, and it starts on April 15th if you haven't paid. Here's the good news. The IRS actually waives the late payment penalty if you've paid at least 90% of your total tax liability by April 15th. So if your estimate is close, you're protected. One more thing worth knowing. You don't have to explain why you need more time. The extension is automatic. The IRS will only contact you if your request is denied, which almost never happens. And if you're a U.S. citizen living or working outside the country, you already get an automatic 2-month extension to June 15th. If you need more time beyond that, you can file the form by June 15th to extend all the way to October 15th. Filing a tax extension is not a red flag. It's not an audit trigger, and it's not admitting anything went wrong. Millions of Americans file extensions every single year. You're simply using the tools available to you. The real mistake is doing nothing and missing April 15th with nothing filed and nothing paid, because that's when the penalties stack up fast. So take 5 minutes, file your extension, and give yourself the breathing room you need.